I'm Megan Smith from Kids First. I'm going to be kicking us off here, and then I'm going to turn it over to Jeff. Just watching participants kind of file in. I'll give it a second or two. Thank you guys all for joining us. All right, it's moving up there, moving up. This is new. We've never done this before, so we're learning. All right. All right, I'm seeing people file in, so I'm going to go ahead and just get us started. I want to say thank you for joining us during this next hour or so. Again, this is new. Oh, somebody's chatting. Hi, Victor. We want to make the best use of everyone's valuable time. We know that this is a difficult time, and we want to be able to help as best we can and offer some resources for you guys. So just a couple housekeeping things as you guys are filing in. There is a chat feature. Victor just said hi to everyone. You can use that to talk amongst each other. But I'd ask that if you have any questions pertaining to any topic that we're talking about, to use the Q&A feature that you'll see at the bottom of your screen. So that will ask questions anonymously to us. If you would like, and we would like you to use your name in that. Hi, people. I see people saying good morning. Good morning. So if you could use the Q&A feature to ask questions, I will be monitoring that throughout. Some of you have sent me questions already, and we've looked at those. I've handed those over to Jeff and Jen also, so that we know that you guys have a lot of questions about certain things. So use the chat. Hi, Claudia. And use the Q&A feature, though, for questions. We will do our very best to address questions that are on topic during particular topics. And then we'll also have a question and answer session at the end that we can use to answer questions that might be off topic or that are not going to be specific to what we're doing. So again, use that Q&A feature. I'll be monitoring throughout for any questions that you guys have, and I'll turn it over to Jeff. So thanks, everybody. Thank you for being here, and I'm going to turn it over to Jeff.
Hello to all. Under very unprecedented circumstances. I'll do my best to keep things light for us, as I always try to do when I'm in this kind of a situation. I'm hoping that all of you are healthy and that all of your loved ones are healthy. Collectively, we don't know anyone with the disease yet, and we hope it stays that way, and we hope that best for you too. Sitting here with me, by the way, as you've gathered by now, at about 72 inches to my left is Jennifer Smith, and Jennifer O'Hara, formerly Jennifer Smith, and about 72 inches to my right is Megan Smith. Jennifer and Megan are vice presidents of Kids First Sports Center and are part of the faculty at the Metzger boot camp. And I am the founder of both of those operations. So it gives you a little bit about us. We're here today. Who are we representing today? We're representing the industry today. Sheesh, I get emotional sometimes. This is one. You know, very rarely do I watch myself on TV getting teary-eyed. So we're here to help the industry. That's the whole purpose behind it. We've been leaders in the industry, kind of self-appointed experts over the last many years. Well, now it's time just to share ideas, thoughts, things that we've discovered along the way throughout this crisis in hopes that they help folks. So I'll give you a little bit. I've got quite a few notes, more than usual. A little bit of an agenda here. First thing we're going to do is we're going to go over the last couple of weeks, what we did at Kids First Sports Center, and more importantly, why we did it, our thought models, our thought process behind our actions. The second item, we're going to talk a few words about where we are today with the disease and the crisis in general, and then some scenarios about what tomorrow might bring. The third item is going to be, I'm going to talk about business interruption insurance. A lot of mistaken ideas out there. I'll give you the best of what I know on that subject. I've pretty much been immersed in it the last few days. Number 4, we're going to talk about what seems to be most on everyone's mind, and that is the government rescue plans that are out there, the small business SBA disaster loan, and the payroll protection program. And then we'll open up for questions. I think Megan explained if questions at any time, questions pertaining to the topic we'll address at the end of the topic. Questions off topic we'll take at the end, all of that time permitting, of course. Just a little bit of history. For us, I've been tuned into this since it was over in China, Wuhan. I'm thinking, oh boy, could this be the thing that I've been afraid of for some years? I've said many times in many settings, if there's one thing I'm afraid of in this industry, it's a pandemic. So never once thinking we would see it, but knowing it would be kind of our worst case scenario, and that's where we are. So now we're dealing with it. For us, the real trauma started about March 12th. We knew things were getting real bad out there, and we thought, oh man, we don't know what's going to happen. We had a department leader meeting in the morning and made some great decisions. So it was actually in the morning. I take that back. It started about 10, ended about 2. Walked out of there with many good decisions, and by later that afternoon, we had to scrap it because things had changed dramatically. It's when Ohio announced the schools were closing. We began to see the writing on the wall that this could be happening to us. We began to look at this quite a bit differently on March 12th. We began to realize, it's a real possibility we're going to be closed. Matter of fact, even a likelihood we're going to be closed. When we looked at this, we said, okay, how long might this be? If this goes on for 2 or 3 weeks, this is going to be a trauma, but we're going to weather that storm pretty well. If this goes on to the end of May, then we're going to be having some real significant issues, financial and otherwise. And then if it goes on further than that, the problems just multiply pretty quickly. Okay, so then we began to look and we say, okay, what is the worst case scenario? So we said, okay, the worst case scenario, of course, is unknown, and it's a moving target. So let's do this. Let's peg it. Let's peg the worst case scenario is we are mandated closure till the end of August. All right, what do we do in the worst case scenario? And we had to focus on the worst case scenario because if we focused on best case scenario and we made decisions based on that and we let go some of our cash and then it became worst case scenario, it was a one-way street. That cash was gone. We couldn't get it back. So we said, we got to look at the worst case scenario, and then we have to make our decisions based on that. As painful as that may be, and we all know how painful that's been. So we kind of developed a mantra at that time, cash is king. So under that means we need cash, we've got to conserve cash, and then we're going to have to grab cash. Now, where are we going to grab cash? Maybe personal loans from the founder. That's certainly on the table. Let's take a look at our line of credit. The first thing I did was call our bank and say, hey, listen, we're worried things are going to be getting bad. This is before the banks were quite tuned into it even. And I said, we're worried things are going to be getting bad. Let's just talk about our line of credit that we've had for decades and never really used. So I just want to make sure that that's going to still be there. Yes, sir, Jeff, that's still going to be there. Now, obviously, I didn't get any kind of guarantee there in writing, but I believe it's going to be, and we have to operate on that assumption. So we got our line of credit, if you will, kind of a little bit of protection on our line of credit. And then the other aspect of getting cash that's going to be is what loans might we be able to get going forward, and in particular, what kind of government rescue plans there might be. We all know now a little bit more about that. So basically, since conserving cash is so important and it's a one-way street, if we take a slow response on this today, and then it is worse, and thinking it's best case scenario, it is worst case scenario, and we've let go of our cash, we can't get it back. So a lot of our decisions we made were very painful at that time, and we certainly second guessed ourselves, but we made some decisions that's turning out to be certainly either the right decision or maybe even conservative in terms of how many people we laid off. And momentarily, Jennifer's going to talk to you a little bit about that. Okay, so we had to stop, in conserving cash, we had to stop payroll. to whatever degree we could. We had to do what we could about the rent and the mortgage, because that's our second biggest expense category, as it is with most of you, if not all of you. And then we had to stop the non-essentials. Megan's going to be talking to us about the non-essentials. Let's see here. I want to make sure I don't forget anything before I move on to the next page. Okay, Jen, you want to give us a little bit of a feeling about what we have done. We're looking here at the question and answers here for a minute. Okay. Pardon my fumbling around. Until a few days ago, I had never posted anything on Facebook. There's Jen, 72 inches away.
Hi, all. All right, so I think I'm just going to give you a quick rundown of how we went about making decisions. And Jeff's mantra to me at the time was conserve cash, conserve cash, conserve cash. And so that's, and we had had a few meetings at that time on the departmental leader level with our leadership team and our executive team, running through that worst case scenario. And so it was really great to have his perspective, because you all know we're in that people business, and when we start talking about layoffs, we're talking about our friends and people who are like family to us, and those decisions those decisions can be very emotional. And so it was, we had to really pay attention to what we could do in the short term to be sure that we're safe in the long run, and that was very difficult. So as Jeff said, March 12th, it all kind of hit the fan. We realized that shutting our doors or pausing, suspending programming or pausing programming was going to be imminent. We just weren't sure of our timeline for that. And we started talking about possible layoffs at that time. We were looking at things like our current cash that we had, our lines of credit, what our possible or potential revenue would be. And remember, this is March 12th, so we were looking at April, wondering if we would have some kind of programming to bring in any revenue. By March 15th, we had made, let me make sure I got these dates right. By March 15th, we had made the decision that we were going to be doing mass layoffs. By March 17th, we did issue a mass temporary layoff of 190 employees. That was all of our part-timers and our full-time hourly employees and one full-time salaried employee. Consistently, we were continually assessing what might be down the road for us. So that was March 17th. By March 26th, we were still working with Laura, who many of you may know from boot camp. She's our in-house accountant, and she was running numbers all with varying scenarios. How do we keep our salaried people on, or excuse me, our department leaders on at 60% of their salary or at 80% of their salary? One thing that we did learn immediately is when we did a layoff, we are required for our full-time people to pay out their PTO. So that went into the numbers and the equations as well. Where we sit right now, starting a new pay period tomorrow, is we are running at about 23% of our payroll expenses. And we had made a decision that we were going to need to lay off a handful of our department leaders. And when, I'm assuming Jeff is going to talk about the tuition options that you put forth.
Not by plan, but
Okay.
we can get to that.
I'll just,
That's on the
Okay.
Facebook page.
Okay, so many of you,
available in writing. So
okay, so many of you have read about our tuition options. Our clients were very generous, and they spoke, and it was clear to us at that time they were investing in Kids First, but they were also investing in the face of the department that they're familiar with. So we went back and we ran numbers again, and so we are taking it one pay period at a time, but currently we have a fair number of all of our DLs, our department leaders are still on staff, but they are at a reduced salary.
at what percent?
Starting tomorrow, it's 60%.
Okay.
And we are still paying all of our benefits for those who have qualified, whether they're laid off or not, as long as we can. And they all understand that there are many of these things that are out of our control, and our job is to continue to assess that cash flow. I think I am caught up.
Okay. Okay.
Oh, something interesting that I'm just going to throw out there. Typically, our team tuitions are about 20% of our revenue during the month, each month. With this offer that Jeff put forth, they did until the rest of the numbers were run. But as of Saturday, when I knew the numbers, our team tuitions were 40% of our revenue. So they spoke.
Good.
Yeah. All right. Back to Jeffrey.
Get your tape measure out, Jen. I think you edged a little close.
I'll move it back.
I give you another some thinking here about some of our thoughts that the framework that we used in making decisions, and this framework is going to be guiding us our decisions going forward. We saw in what decisions we made then, what decisions we're making today, and what decisions we're going to be making tomorrow as we learn along the way. There are 4 criterion. And it's, number 1 is, how long is this thing going to last? How long are we going to be in a mandated closure? Number 2, what government rescue programs might there be? Now remember, we developed this thought process 2.5 weeks ago. So what government rescue are we going to see going forward? And my prediction was this thing was going to get a lot worse than people were saying at the time, and I think that's in the case. And it's a bad deal. We all know it, and we're not through it yet. At what condition? That brings us to number 3, and this has to do a lot with number 1 and number 2. But what condition is the economy going to be in when we reopen? Are we going to be operating at 100% of a typical summer enrollment, assuming we get back into operation in the summer, or are we going to be operating at 50 or some other percentage? And number 4 is, how much cash do we have on hand? And that would be, in the Kids First coffers, my cash, which I would pledge to keep the business alive. If not, I want to say obviously, but maybe it's not obvious, but that's what would happen there. So we got those 4 criterions. It is how long it's going to last, what government rescue programs are going to be, what conditions the economy going to be in, how much cash do we have on hand. Well, when we first started making decisions, the answer, number 1, how long is going to last, we had 0% of the knowledge, information we needed. What government rescues might there be? Had 0. What condition will the economy be in? We have no idea what it'd be in, because that's all dependent on number 1 and 2 and other factors. And number 4, we probably had about 80% of the information we needed relative to how much cash on hand do we have. So we had a little bit of information there on that number 4, but 1, 2, and 3 are shooting in the dark. And so we're right where everybody else was. We're taking best guesses. And today I would put, how long is this going to last? I'd say we have 20% of the information we need. Why 20%? We know it's not going to last 2 or 3 weeks. Okay. And we guess it's not going to be a month. 2 months would be very, very optimistic, and then 3 months is probably more realistic. And then do we have rolling resurgence of the disease going forward for the next 12 to 18 months? That's a question we got to ask ourselves. Right now, how long it's going to last? Maybe we know 20% of what we would like to know. Government rescue. We know maybe 70, 80% of what we know. Part of our topic here today is going to be the government rescue plans that are out there and available. What condition is the economy going to be in? Can't even begin to guess. I'm not going to go down this path other than to mention it, because what we're talking about here is the cure for the disease, but we also, at some point, we're going to have to turn our attention, what's the cure for the cure? Because all the money that's been plugged into this economy in various manners, one manner or another, we have a $4 trillion debt in our nation now. We're going to be, my initial guess was we're going to be adding $3 trillion to it with bailouts and rescues. My estimates today would be closer to $5 or $6 trillion, putting us at $10 trillion, maybe more by the time this thing is over. Nobody knows what an economy operating with that kind of debt might look like. So, but we got to keep our ear to the ground. Maybe it's a premature question, but we got to start thinking about it. And so cash on hand, now we've had enough time to pour through it. Now I know what cash we got available that's on hand. And so we have 100% of that information, or virtually 100% of that information. So we'll still be looking, trying to estimate how long is it going to last. Are there going to be, what are the details of the government rescue that we have? Are there going to be more government rescues? And the answer is probably yes, by the way. That's my prediction. What conditions the economy going to be in? It's going to be tough. I'll stay away from saying anything more. Then it's going to be tough, and I don't know how tough, but maybe we'll know more as time goes. Maybe we'll be able to guess better as time goes on. All right, today I followed our local news, and this is going to differ in your locale. Maybe you're ahead of this game, maybe you're behind this game. But if it hadn't hit you, it's going to. Our county is now really preparing for a surge in the next two weeks. They're very concerned about the 911 system. Are they going to have enough adequate EMTs, enough hospital beds? All the concerns that we've read about, and maybe your locality is experiencing too. Now, I don't mean to imply we have lots and lots of sickness in the disease or disease confirmed cases here in Cincinnati area, because actually we don't. But they are predicting that we will, just like most of the rest of the nation. So here's a thought. Now, this is a future thought. And there was a mention of this on this broadcast I was listening to. But county revenues are going to go in the dumper. County's not going to be collecting near as much revenue, regardless of how it does it. Sales tax is going to be way down. That people aren't going to be withholding real estate taxes. So we're going to have local municipalities that are going to begin to operate in a red, and they can't print money. And so the government doesn't just have gymnastic schools and swim schools and the like to bail out, and restaurants and Boeing and the big boys. They've got municipalities and maybe even states to bail out. That's how this thing can ripple. And we got to keep our ear to the ground about that, because that'll have bearing on our decisions as we go forward. When are they going to need to cut back on such services such as police protection, garbage pickup, fire and other service? Those are things that nobody knows the answer to, but these are things that are being discussed in our locality, probably yours too. It was an interesting exchange that the Governor Boshears from Kentucky. We're Cincinnati, Ohio neighbors, Kentucky. And so there's a lot of shared Ohio, Kentucky news. And Boshear was admonishing Tennessee for, this was 3 days ago, pardon me. It was admonishing Tennessee for their lax, their lenient steps in forestalling this disease. And telling its citizens, don't go across the border, don't go to the bars that are still open there, stay home. Well, they're pretty much slamming the Tennessee and hitting them in the eye. Well, the point of telling you that story is today I saw headlines, local headlines, that Tennessee has 4 times as many cases as Kentucky. So is that only because of the difference in the way the states have handled it? I don't know. Bottom line is, it appears that the situation that we're in is real. It's getting worse. I had in my notes to take a moment to talk about best case scenario, worst case scenario. I'd say best case scenario is that things begin to return to normal the end of April. That would be I'm going to revise that. The best case, all logically, would be the end of May. That'd be then closed for 2.5 months. Maybe I'm wrong. I'd like to be wrong. I'd like to think it was Easter, but it isn't going to be. So we're looking at best case scenario. We're up and operating in June. What will the economy look like? What revenue pace might we be operating at? We don't know. Worst case scenario, we're closed for till the end, end of July, end of August, and then we're open, and then we have to close again, 2 or 3 months later. So, and what do we do in that case? I'm not sure. Stay tuned. Is the best bet. We're taking steps now. For a 2 or 3 month closure, and we're doing really pretty much what we. If we knew we were going to be closed for 6 months, we'd probably take more aggressive steps on our staff and layoffs right now. So we don't know that. We don't think that's the most likely. I think the most likely is more like 3 months, somewhere in that neighborhood. So we are where we are with our staff, as Jennifer pointed out. More notes, pardon me. Let's talk now. Let me tell you a little bit what I know about business interruption insurance. I've spent quite a bit of time That was, I realized, a fine view I just was leaving everyone with. Told you I'd keep it light. Okay. All right. Business interruption insurance. We all learned pretty quickly, or most of us did, that oops, no, it's not covered. That was the word that I got from my insurance agent, and many of you got word. And my son said immediately, this was 2 weeks ago, file anyway. He said he reread our policy. He says we've got something like to stand on, file anyway. So kind of reluctantly, not me reluctant, but the insurance company said, well, now you're not covered. Well, that was verbal, and I said, fine, but we're filing. So we made a claim, and we feel that I'd put the possibility. Here's the possibilities right now, and I'll give you some details behind this. The possibilities that we may be able to actually collect without a suit would maybe at 20%, and then 20% if we have some sort of legislation that forces the insurance company's hands. Let me give you a little bit of information, a little more detail about that. If you file a claim, your insurance company is going to respond in one of four ways. Okay, they're going to accept it and accept the claim. They're going to deny the claim. They're going to give you a reservation of rights letter, which basically is saying, yeah, we kind of know, this is interpretation. We know we may have exposure there, and we're not sure enough of ourselves to deny the claim, but we're sure not going to award it. And they're going to, in that reservation of rights letter, they're going to ask for more support of information about your claim. In which case, I really began to need the help of an attorney at that point, and I think most of you probably would too. I'll give you some of the thoughts behind our argument on that. That we made when we did response. We did receive a reservation of rights letter, and we have responded, and we haven't got a response to the response. And I'll explain a little bit about what could happen there. After we make the claim, we got the reservation of rights letter right away. The insurance company has 21 days to accept or deny this claim. So the reservation of rights letter is basically kind of we're on hold. And so ours has certainly not been accepted, nor has it been denied. Then there are extensions that they can be filed for. And my understanding is those extensions can go on a pretty long time. So consider for the moment ad infinitum those extensions go on. So the bottom line is we filed the claim. We got a reservation of rights letter. We've responded. We haven't heard anything in response. In 21 days, they're going to either have to give us a denial, or they're going to have to file for an extension, which again is what we're expecting. At some point, so the question is, now this is from Matt, my son, and our attorney. At some point, Dad, how long are we going to wait until a declaratory judgment action might be made? The declaratory judgment action seeks the court to quickly rule. At the very best, the civil clause should provide coverage for 30 days. That's at the very least. I'm sorry. So he's very optimistic about some recovery there. Not 100%, by the way. So, and that's what the other lawsuits are doing. And then the 12-month business income, we have purchased our business interruption insurance is to pay us revenue for 12 months. We have $4 million over a 12-month period. We're closed for 12 months. He said the 12-month business income clause that we are trying to, fight through was going to be harder to prove because of the issue of physical loss. Business interruption insurance is tied to your building insurance, and business interruption insurance kicks in typically when there is some damage to the building, the classic case being a tornado lifts your roof off and you can't operate. And so however much insurance you've purchased, that's going to help replace your revenue during that shutdown period. So that's typically. Many, as you all found out, likely, many business interruption insurances have an exclusion on virus. We are one of the lucky ones. Ours does not have an exclusion for virus, has an exclusion for mold, but not for virus. We feel that's a little bit in our favor. We're going to claim that there's been damage to our building, that damage being microbes. There's been case law that says microbes can damage buildings. Now, for instance, mold. That's damage to the building. Hence, the insurance company's effort to exclude mold from many business interruption policies. So we are going to make the claim that it is microbes that has done damage to the building. As you heard when I read Matt's response here this morning, he's not real hopeful for that, and frankly, neither am I. I think those of you that do have a virus exclusion, I'd say, you certainly have the civil right to sue, but I don't think you have any leg to stand on. I say that. I'm not an attorney. It appears to me that one wouldn't have any legal leg to stand on, and it would be a very weak lawsuit, and it'd probably cost you money you'd never recover. Is there going to be, the big question for those who do have that exclusion, is there going to be some sort of either state or national legislation, law that will force the insurance company's hands? I have no idea about that. I can say this, that if they were to force the insurance company's hands, it would likely force many insurance companies out of business. So it's not just as simple as striking a law. So then the government would have to backstop the insurance company. So it's a snarly issue, and I've pretty much, let's see here, exhausted what I know about that particular topic there. Those of you who do have business interruption insurance, I do advise you to make a claim. Because if you don't make a claim, then we know the answer is 100% you're not going to be able to collect anything. If you have it, and make that claim, and if you have no virus exclusion like we do, you're one of the luckier ones. You have a little bit stronger leg as things go forward. Again, your action is going to really, other than some sort of legal, some sort of law, national or state, you're going to probably have to file a lawsuit, those of you that have that exclusion. All right, let's get on, if we can now, to the government rescue plans. There are many government rescue plans and local rescue plans, most of which I know nothing about. The big one on many people's minds are going to be the SBA disaster loan, and then the payroll protection program. I know quite a bit more about the payroll protection program because I've studied quite a bit more about it for Kids First Sports Center. The disaster loan, SBA disaster loan, is not it requires that all owners of 20% or greater exhaust all of their resources first before any loan proceeds would be available. It's not the order I want to do things in. So I can't speak any more about that. I do have quite a bit of information about the payroll protection plan. I've read countless pages on that. As we all know, there are a lot of gray. Most of the questions that we've had come in have been about the payroll protection plan, and it's about the detail of the payroll protection plan. And the point, here's the point. We got to understand this here. There is still a lot of gray about this plan. Let me explain the way this thing works. It'll be a little clearer here. Congress passed a bill that has very general language in it. Again, the name of the bill is Payroll Protection Plan. It's very general language. It's up to the SBA then to determine the details that captures the spirit of that general language. And then it is up to your bank to interpret the information that comes from the SBI. What I am gathering here is, everything I can gather is the banks are going to have the final word on this. Right or wrong, how your bank interprets this is how that's the rules for you, whether they are right or in the spirit of it or not. Now, but later on they be found to not comply with it, and then there's a problem for the bank. The answer is yes, because the banks are backstopped 100% on this if they comply. And complying is, again, a matter of interpretation. So all of these details that you see being thrown about are their opinions. So at this point, even the banks don't know right now. And I've talked with 2 banks this morning on this very issue. They don't know yet. They're waiting for the SBA. So here is what I can gather from the bill itself. First of all, there are applications available at some banks, not all. The applications that are available, or think of it as a pre-app. And the pre-app is going to ask for this information. Basically, your name, rank, and serial number, your business name, your contacts, the contact place, and then are you a customer of the bank? That captures any bank that says, I've got an application for you. That application is going to be similar to that. Think of it as a pre-app, because the rest of the data is going to have, the rest of the application is going to have to be designed, and then you're going to have to supply whatever it is information that they're asking for, and that's still a little bit of a question mark. Okay, think of this program in this manner: you got to figure out how much loan you're going to get. Now, there's a formula for that. You got to pay attention to what you can spend it on, what you can use it on, and then you got to pay attention to what's forgiven. Now, I'm getting this from the bill and my interpretation of the bill. How much you can get is based on a formula that is 2.5 times payroll costs of the average month over the last, and here we go, over the last year. Does that mean fiscal year 2019, or does that mean from April of last year to March? We don't know that yet. But it's going to be your average payroll cost over the last year, which is a general statement, and multiplied by 2.5 times. Now, what are payroll? Okay, pardon me. There are indications in the bill that it's not 2.5 times payroll costs. It's 2.5 times the wage plus the vacation plus leave plus any severance pay plus group health payment. I also have some information that and also retirement. How much, so payroll costs are more than just wage. That's the point. Big question. It's not very unclear. Does that include subcontractors? The way the bill is written it's not definitive on that. It's still up to the determination by the SBA. So we don't know the answer to that. And I don't think anyone does. I think there's still only opinion on that. There is one thing that we do know, that there's a cap of $100,000 of wage. So you cannot count any payroll over $100,000 when you're calculating your formula, when you're calculating your payroll costs. We're getting ready to multiply that number by 2.5 times. So that seems to be pretty black and white in that. So payroll costs, it's still up in the air. Wage, yes. Vacation, yeah, we think. Leave, yeah. Severance, group health, payment of retirement plan, yep. State and local taxes, probably so. Subcontractors, bigger question mark, unknown. What can it be used for? We used to pay payroll taxes, mortgage interest, not principal, as I read it, as I understand it, and then rent, and that'd be and utilities, and then also any other interest payment on obligation, not the principal. Now, then the other piece of the pie in this is what can be forgiven. As most of you who are familiar with this understand, that if once you get your money, if you use your money for certain things, then that is actually not a loan. It actually is a grant. That money does not have to be repaid, that portion of it. So what we think can be forgiven is payroll costs. Now, again, there's some question on that. Interest on mortgage, rents, utilities, and this is different than the initial information that came out. Rents and utilities. Now, here's a point that is very unclear in this, and that is the period of time. It's really tricky. The forgiveness section of this bill defines covered period in one way, and then is defined differently in another part of that bill. So there's still unknownness about that. But here's the way everybody, so many of the questions are getting hung up on the detail about the forgiveness, here's the big point. You want to here's more important than any of the details right now. Get the money. Get going on your application. And by that, what you can do today, and maybe tomorrow there'll be more you can do, but what you can do today is start to build your spreadsheet of all of your of the costs that we just listed. And by the way, I'm going to put on the Facebook page. I'll make a post of another document that'll help define this for you. Build your spreadsheet of all of the costs that are likely to be forgiven. And as you begin to average it, now it's going to be a little difficult. You're just building a spreadsheet now because the data you're going to be mining, you don't know for what period you're going to be mining that data. Is it going to be for fiscal 2019, or is it going to be for the last 12 rolling months? We don't know that, but you can build it with dummy data. Build your spreadsheet with dummy data for payroll costs, and do these all line item by line item, because if things change, if this is incorrect, and going forward, you realize, oh, gee whiz, severance pay is not on that, then you can just delete that from your spreadsheet. So line item by line item for your wage, for your vacation, for your leave, family leave, other leave, severance, group health, payment of retirement, state or local taxes, and then I'd build another spreadsheet, or maybe another line, pardon me, that includes any subcontractors that you're paying. Because we don't know the answer to that. So start building this spreadsheet, make it flexible enough that you can change the time period on it, and then flexible enough that you can just delete a line item if you find out that that's not included in the calculations. The important thing is to forget the detail. You don't know nobody knows the detail. Your bank's detail will be different than my bank's detail. So forget the detail right now. Go after the money. There's no harm in going after that money. And there is harm in waiting. There's $349 billion. And whoever's in line first, whoever's the best relationship with their bank has a real edge over the person who drags their feet on this or doesn't have a good relationship with their bank. I understand that the SBA's criterion, the bank is going to be making, to my knowledge, the largest piece of the decision is going to be made by the bank. There are certain criterion by the SBA, and the only thing that I've seen written about what's the SBA's criterion is what is the credit score of the owner. So, that's a good luck on that one if you've got a problem with your own personal credit score. Bottom line, doesn't hurt to apply, get going, get moving. Being fast and first is important in this particular case for two reasons. One I already alluded to. One is the money will run out, $349 billion, but now they may add more to that bucket. But the money is a finite amount of money, and your bank, there's 1,800 banks that are going to be processing but your bank may have this many applications, and if you're at the bottom, that's not to your advantage. So move fast. Don't get the detail. Don't worry about the details on how you can spend it. Now, I know that should we call our employees back to work now? That's all going to be piece of the decision. I wouldn't get too hung up on that. That may be forthcoming in a few days. But right now, get moving on getting that application in. Okay. Double check my notes. Whoops, we'll avoid that again.
Quite a few questions about who our insurance is through.
Okay. All right. We're into that there. I've exhausted my knowledge on those subjects. There's no more. The well is dry. So now, questions about who are we? Our insurance is through Cincinnati Insurance Company, who has proven to be an excellent insurance company in the past, and we're hoping the relationship in the past has bearing on their decision going forward. Again, I'm only putting that at 20% though. Mm-hmm. Okay, I'm looking here at questions here.
A lot of people asking, do you know, again, this might be interpretation, if the PPP is for part-time employees?
Yes, it's the PPP for part-time employees. I have not seen anything in writing that makes a distinction. Now there is some part of the calculations that has to do with full-time equivalents, but what you can spend that money on and what you can spend the money on, what's forgiven, because those are two different columns of information. is there's no distinction between full-time and part-time. I feel pretty certain about that answer.
Can you explain the $100,000 cap?
Yeah, as best I'll explain it in this way, is if somebody is earning $500,000, then when you're doing your calculations for wage, then you can't count $500, but you can count $100,000. Can't count anything more for your calculations over $100,000. Is and I'll repeat these questions here. I'm sorry. Somebody said, "Can you explain the $100,000 cap?"
Per employee.
Per employee, yes.
Right.
Okay.
Several questions are asking, at what stage do you call back employees that have been laid off?
At what stage do you call back employees that have been laid off? That is a big question for us too. I don't think there is any particular answer. Jen, what are your thoughts? I know you're closer to that.
It would be, hi again, it would be determined by a couple of things. One would be the PPP, that what kind of cash we have on hand to make those payments, and if our revenue were to change drastically, obviously. And I had another thing in my mind, but it just dissipated. So it has to do with the whole picture. It's not a particular moment in time. If we were told we could open our doors in 2 weeks, that would change things.
We would know the answer to that.
That's right.
I'll add this. Is if we probably won't know that we have the PPP until we have the check in hand. Okay, that's where now we're 100% sure. All right, now I am 80% sure that we fall into the eligible category. I think Kids First. I haven't seen anything yet that kick us out and say I'm sorry. But I'm not 100% sure on that, and 80% sure on that. As soon as I get to the 90 or 95% sure range that we're going to get that money, and we're not there yet, then we would. I don't think we'd have to be 100% sure, because that's only cash in hand. If we were 95% sure, then we'd be calling back people based on that, and then take our lumps if that 5% played out. So the answer on when to call people back, it's a big one for us too. We don't know. We might know more, within 24 hours. Questions here. We're sifting through. I'll make this. This is the second or third time I've had people. Is it 2.5 times payroll salary for 12 months, or for 2 or 3 months, or what? Okay, let's say it again. It's 2.5 times your average single monthly payroll. So take the last 12 months, and again, that's defined very unclear right now, but you can get a good guess. Just take the last rolling 12 months, and what's your average payroll for the year? Your payroll for the year, divide that by 12. That's your average payroll costs, and then multiply by 2.5.
Do you know anything about the SEC 7A loan?
Question about the SEC 7A loan is that I do not have any knowledge on the SEC 7A loan. I am familiar with the SBA. Maybe it's SBA 7A loan. Maybe that's meant to be SBA.
Maybe.
Okay, the SBA 7A loan, I think that is the disaster loan that I previously alluded to. I only know that it's not good. I looked at it with enough detail to know that it's not good for us. And so quite frankly, I don't have any more knowledge on that.
Someone asked what your arguments were other than microbes on business interruption.
Okay.
Or do you want to go?
I'm going to stick for a moment. I'll go that next, Meg. When I said exhaust owner resources, which resources? Cash, investments, IRAs. The wording is exhaust reasonable. This is the wording, exhaust reasonable resources. I would right now, I'm not an attorney, B, if I was, it's not a definitive answer. I would say that probably means bank accounts, cash at hand. Probably, if I were interpreting that, I'd say that it means any semi-liquid funds, such as securities that can be liquidated with the push of a button and a sell order. I would say that's probably reasonable. I would say unreasonable might fall the category your house. Are they going to force a sale on your house or your vehicle? I'd say I doubt that. So I'd say it's probably liquid and semi-liquid investments. That would be my guess. And then the other, I wanted to go.
Well, there's two insurance questions. So one, did you claim other than microbes?
Oh, any other claim that we made other than microbes? No, because what we're trying to do would be prove damage to the building. There's a logic that says we know that microbes can damage buildings. It's called mold, and that can shut down buildings. And I think there's some other case law I understand, but I can't quote. There's some other case law that where microbes are actually considered damage to a building. So our virus germs, can we make that claim? I don't know. I mean, I could see a counterclaim saying, yeah, that's true, but not. But after X days, that is. So it was bad for. But you've been closed for 60 days. That argument only holds for the first 14 days, 21 days, whatever. So we don't know more than that.
Have we asked to have liability insurance reduced with fewer students?
Have we asked to have liability insurance reduced with fewer students? No, we haven't. I have actually gone to my agent. Our carrier is Markel. I've gone to our agent, Rick Theaters, wonderful guy, good guy. He's local, so it's not likely any of you know him. And he turned me to a party at Markel. I had a conversation yesterday with not the correct party. The correct party responded with a phone number that hey, give us a call. And and my question was deferring, and it was not about reduction because of lesser students. To me, that's a question that would come later, which would be, okay, now we're operating at 50%. Now I'd be on the phone call to my agent or to my carrier. My question was I'm respectfully asking for deferral for the payments to be deferred for 6 months. Obviously, I'm going to ask for more than what we're going to get. So all I know is I have a phone call. I got a phone call, an email a couple hours ago. Have not followed forth on that. I kind of recommend that you all do the same, and just say, hey, listen, we're not operating. You have zero or near zero risk right now. Are you making any? That was my question. We're not operating. Our pace is at zero. Your risk is reduced. Are you making any adjustments to the premiums? So I'll report back either maybe in another if this has done anybody any good, another webinar or on the Facebook page as I learn more.
If somebody's applied for SBA disaster relief but hasn't heard, should they apply for PPP?
As if we've applied for the SBA disaster, haven't heard, should we apply for the PPP? I don't know. I would seek further information. I actually saw some verbiage that made me question that is actually the verbiage, and I cannot quote it verbatim, but it said if you've already applied for one, you are not eligible to apply for the other. Now, that was similar to the wording. In other words, I know you can't receive both, but can you apply for both? The verbiage said don't, but logic tells me this, that the bank, and by the way, the bank has taken the application for the PPP. The SBA disaster relief is going directly, as I understand it, to the SBA. So are they going to be comparing notes about who's applied for what? I don't know. I wish I had a more definitive answer for you. A caution on it. Logic tells me, sure, apply for both. You can't get both. But caution tells me you better learn a little more about that.
A lot of questions about bringing people back with PPP, if you get that approved. Calling back employees, getting unemployment and PPP.
Okay. Jen, a lot of these questions here, wait a minute, pardon me. I'm going to go this way.
Those are the earlier questions. Someone asked, is a difference between laying someone off versus just not giving them any hours, like an hourly employee?
I don't know the answer to that.
Can they claim unemployment if they haven't been laid off? They just don't have hours.
I do not know the answer to that question. Can they claim unemployment if they have just been reduced to 0 hours but not been laid off? I'm sure that some of you probably do know the answer to that. Let's go to some of the more recent questions.
These are down here.
We're down here?
They were down.
Okay.
Somebody asked about renegotiating with landlords or rent. You did that with
on my Facebook page, renegotiating with rent. I recommend that you do that. What I have done was to ask our landlord. Now, Kids First, I am the landlord for Kids First, so it's an easy discussion to have. Kids First 2, our sister operation, has does not own the real estate. No, it's the real estate is held by a third party, and I immediately went to them explaining our revenue is 0. I respectfully request our revenue is approached 0 because it's not at 0, but it is approached 0, and I respectfully request a deferral of our rent for 6 months. I got back an answer that how about we consider that a loan? We add it to the next 12 months payment. And I wrote back, I respectfully, maintain that, that we're looking for a deferral on this, and that it be added on at the end of the term. So at any rate, and I kind of guided them on how to talk to their bank about getting a deferral on their mortgage payment, which, by the way, most banks, I can't say all, most banks are now, initially our bank offered, this is early on the blocks, called me and said, hey, listen, it's interest only on your mortgage payment on the buildings. And it was days later that they called back. They said, hey, it's not interest only, we're deferring it. And that money's gonna be tacked on to the end of the mortgage. So that's for 3 months. And the banks that aren't doing that yet, I would lean on them. I would ask, and I wouldn't take no for the answer. I'd try to get to a different source on that. I'd do it in writing, and I'd be respectful.
Someone said you can, in Georgia, file a separation form if there's no work for a part-time employee.
Okay. By the way, the answer came in that in Georgia, you can file a separation form claiming that there is no work for a part-time employee. That brings up the point about the difference from one state to another. So many of those detailed questions are going to be driven by your state, the unemployment issues. There are some federal unemployment laws, obviously, or federal laws considering employment, but many and most of them are going to be state driven.
Questions about breakdown of.
Hold on a minute. All right, let's take this here. This has got some complexity we might want to dive into. We've been extended the option to defer our mortgage payments on our own space and our rent on our leased space. If PPP is approved, is it a better idea to continue to pay those as long as we have the funds to do so? All right, I'm not sure by this question. Hi, that's Casey. Hi, Casey. Defer. So I'm assuming that the landlord is a third party. All right. In this case, I'm not sure. I'd have to think this through and maybe even see your particular situation. In this case, it's going to be probably fairly determined by your own financial situation. It's going to be I cannot think of a clear rule on that. In our case, I want to address our case. I had told told Laura, our accountant, I said, hey, Laura, and this was a few days ago. I said, Laura, defer. We're going to, as the landlord of Kids First Sports Center, I told her, defer the rent, withhold the rent payment because I have had my mortgage payment deferred. And now once I learned a little more about the PPP, I changed my mind. I just wrote Laura today. Because I did not know at that time I made that statement, I did not think that the PPP that the formula for PPP could include rent. Well, it can. No, and I did. And what is forgiven? Rent falls in that category. So I told her, do pay the rent payment for Kids First Sports Center, because I can always loan that money back to the company if need be. So we did make that change. So, but the answer, Casey, in your situation, I cannot think of a yes or no without knowing more about your financials, about your particular financial picture.
Do you know if that's true?
Okay, good. Millie brings up a good point. For the payment of for the PPP, don't you have to pay 75% of an individual's wage for it to work as a grant? And my understanding is that is true. That's correct. So, obviously it's a detail to check on, but I think that is the case. Keep this in mind. Regards to the PPP, a lot of people seem to be hung up on at this moment what you can use that money for, or pardon me, what's forgiven. My recommendation is that's down the road. Put your energy right now in understanding the piece of the most important piece of that, which is how do I make the calculations? Go get your information there, start building that. Get the money in your bank account. There is no prepayment penalty if you didn't need the money. And you don't have to use that money for the money. You could choose to use it on something else and pay your 4% interest over a period of up to 10 years is what I'm reading. So get the money and spend your energy there right now. Again, I do know you got to figure out when am I going to call my employees back, because that's going to be pivotal to is it forgiven. But we don't know enough information. At least Kids First doesn't know enough information right now to make that decision.
And if it's forgiven, the payments are deferred.
And,
I mean, if it's not forgiven, if it's a loan.
Oh, yes. Okay. If you use the PPP money for something that's not forgiven, then it is a loan. It's not a grant. It's a loan. And that's going to incur interest. And that will be paid at 4% over a period of up to 10 years. I don't know what determines that, maybe your bank. But as Jen just pointed out, there are no payments on that. That is deferred for a period of up to
a year is what I read last.
Okay, I've heard two things. So you don't have any payment to go. You don't have to make any payments on that for a year, or maybe. And I thought it was up through the end of 2020. So unsure about that. Patty, hi Patty. Is that 75% of all payroll or 75% of each person's pay? My understanding is it is the latter. You cannot, for instance, right now, we have department leaders that are being paid 60%. Is that correct?
Yes.
We would have to change that to 75% for each of those people. Is my understanding.
Sorry to interrupt you. And there is a formula to that 60%. It equals their hours per week.
Someone asked if we just reduce pay or hours. We reduce both. Earlier, there were several questions about did we reduce 60% of pay and also hours, and we did.
Okay, yes, we are paying 60% of wage for our department leaders, and we are expecting them to work for that with administrative duties or the like, but that they're working at 60% of a typical work week, whatever that might be. We all know that that's typically calculated based on 40 hours. Who's the right person to speak to the bank? My business banker is still not 100% sure which is the right title or the department. Your business banker, if it's your branch manager, I'd say, yeah, you're going to have the right person. But your business banker, your commercial, I'm going to reinterpret that, not knowing, a commercial loan officer, I would think, I kind of equate that to being your business banker. I would think that would be the person, although it never hurts to ask when you're talking to anybody in any situation, is there anybody that could better, that can better answer my questions? Now, obviously, that can bite you in the rear because it can, it's going to offend. So, hey, listen, is there anybody else who can help me on this so I can get a better answer more quickly? Because I want to move fast on this. that's where I would go with that.
A couple questions about, can you retro people that have been laid off pay with PPP?
Can you retro people that have been laid off and still, and with PPP, and would that be forgiven? And the answer to that is undefined. I have wondered that myself. Is anybody, Jen?
I'm not clear on that.
Okay, we're unclear on that. I think that is an unknown. Going back, remember, Congress wrote the bill in very general language. SBA is writing language that brings detail to it. And then your banks, we're still a step away from what is, because what is for you will be what your bank says. If my bank says something different, then that's what's for me. It's not what the SBA says, it's your bank's interpretation of that. And that's been made very clear to me and the attorneys I've talked to.
And do you have to bring back all laid off employees, or can you do it in groups as you bring them back through PPP?
You have to bring back all of your people at once, and this is, I'm assuming, in order to take advantage of PPP being forgiven. Do you have to bring them all back at once, or can it be done in stages? Logic tells me this is all going to be based on dollars. I imagine that if you are complying with all other aspects of the formula, logic tells me that one could bring them back in stages. Obviously, that's not a definitive answer. You see a theme here, don't you? Okay. Have we lost anybody yet? It looks like we have about is that the number, our number of attending here?
Yeah.
Meg, looks like we've got about 460 folks right now. Hello to everybody, and best.
New ones.
Okay. All right. Let me scan through there. Thank you. This is the first time we've done this. I think we really need 2 host computers. You live and learn. I am so tuned in when I'm speaking to a group to be able to interact and kind of assess that one burning question, etc. Can a president of a subchapter S Corp file for unemployment? I happen to know the answer to that, Patty. The answer is yes, they can. I've actually emailed a handful of my friends my very own unemployment number. Now, that is assuming, by the way, Patty, that you've been taking wage payroll all along. You can't file for unemployment for lost profit distributions if you're a sub S, AAA distributions. Yes, you can file for unemployment if you've been taking wages, or if you've been on the payroll. So yes, I didn't know that, by the way. I've gone my entire life figuring that if ever I laid myself off, I couldn't file for unemployment. But in Ohio, yes, you can. And I imagine that applies to Indiana too. Okay, hi, Scott. The question is, especially since we have some seasonal staff, I don't know the answer to that. What is our responsibility to maintaining the staff, especially since we have some seasonal staff? There are special provisions in this that deal with companies that are seasonal, that have a seasonal company. Now, ours is not, we don't have a seasonal company. We do have some seasonal staff. I don't know the answer to that, but no, there are some special provisions. I'd keep digging, those details hopefully will come clear. Okay, this question, will you email a video of the webinar later? Hi, Sanitra, how you doing?
I think we can.
We think we can.
We'll find out after.
We are learning so many things.
And the answer is, if we can, that's better answer. Better answer, if we can, we will. We think we can. Well, yeah, but we're not. Okay. I'm scanning. I'm going to drop to the bottom here in a moment. And What is it? Hey, Freddie. What type of as Freddie's asking Jeff, what type of moisturizer do you use? And the answer is none, Freddie. You've got to keep it light in these kinds of situations. How do you feel about the biz liability of offering home gymnastics instruction? We approached our carrier and we asked if we would be covered for such, and the answer is yes. They want us to keep it to our current clients. We don't want to go solicit to a new client base out there. So that, which is a little vague. Does that mean our current students, or what about that student that, you know, that came 6 months of last year, but they paused for a couple of months at the wrong moment? So we're kind of interpreting that as anybody who's been in our program for the last year. So there's an interpretation that we're making in behalf of the insurance company, and those are the, if you will, the unknownness of any decisions.
And I think our set activities that are typical to their class, nothing crazy.
Oh yes, activities are, yes, we can't start teaching archery if we're gymnastics coaches. It's got to be specific to our area of expertise.
Kathy had a question about insurance.
First, where? Help me out. Right. Okay. Kathy. Hi, Kath. How you doing? Hey, Kathy, by the way, we have, and I'm speaking to Kathy, but I'm talking to everybody. So you talk about timing. Right now, we just gained 22,000 square feet. Kids First did, and we are right now in the middle of building out, to our knowledge, the world's largest ninja floor. And I thought about grabbing a photo and showing it to you, but it's too painful. Right now, we have $300,000 worth of equipment laying all over our floor. Some of it erected, some of it just laying there. We're halfway through the job of installing we're figuring it's going to be, including the operating costs, about a $400,000 startup sitting there half finished with 0 students. So how about that for timing?
Better question.
Okay. What's that? What are you pointing?
Is business interruption
a
separate policy?
Is business interruption insurance a separate policy, a part of every property insurance policy? I may be wrong on this. It's Kathy. It's always connected to my. I say always. To my knowledge, it's always connected to your fire and hazard, but it is an adjunct or to that. So it's part of it in all cases, I believe. You know, I guess I think we're here. We don't have any more. We have Dave. Hi, Dave. How you doing? You have a lot of people posting questions and giving comments on chat and not using the Q&A. Well, okay, I think we've come to the end of our time here. That we're done looking at each other here. What do you say? At times like this, our internal mantra again immediately was conserve cash, and we're going to do everything we can to be the last guy standing, and that's never at the expense of anybody else, just in case that might be misinterpreted. It's just a catchy phrase that really says, we're going to just do everything we can. We have viable business. It was viable before. It's going to have viability again in normal times, whatever that might be. There'll be a new normal. But right now, our energy and our purpose in meeting here is to kind of share some thoughts and ideas about the things that we've done or that might be done that are going to get us through that gap between where we are today and when we get back to the new normal times. So our businesses are going to have viability going forward. They had viability in the past. They're going to have viability going forward. We've got to figure out how to navigate this. And sheesh, do not think. And by the way, I had it in my notes. I failed to precede this. Should have been spoken. Words should have been spoken at the beginning. This is not. I'm not an expert talking. This is a guy just like you who's just trying to read everything he can, read the bills, read the fine points, talk to whoever he can. We've been in business a lot of years, and we have a great team of people. So we have more resources, I think, than many typical gymnastics, swim school organizations. And so consequently, because of those greater resources, consequently, maybe we've learned a little faster than some of you, certainly not others. And so our goal is to share it, which is really what we all got to think about here going forward. So I'm so unused to closing a time together with people without having faces and nods and the like. So I feel somewhat rude in saying goodbye, but I think that's the appropriate word. I'll turn the computer, Jen and Meg, so you guys can kind of have just another moment of
good luck to you all.
Of time spent.
And if you have not been on Jeff's, I would imagine many of you have been on Jeff's new Metzger Boot Camp community Facebook page. So a lot of really great resources there. So it's a really good way for all of us to keep in touch with each other.
Meg, I'm not sure how we can get, whether to do this again, when to do it again, if to do it again, etc. Any kind of feedback? Is there any built-in method where we can get feedback from our hour here?
I believe that you will get a follow-up email from Zoom, or you can email me. I know I put my email in the group. I'll go back through the chat here when we're done. I know that there's some questions, it sounds like, that are in there that we didn't get to, and I'll get with Jeff and Jen, and we'll try to get some answers to you guys in that Facebook group if we weren't able to get to those here. So I see a lot of people coming through here. Thank you guys all for being a part of this. I guess we'll sign off from the Metzger Lodge. Bye.